Big tech and crypto are about to go head to head in a heavyweight match to see if maybe digital assets could break away and get some escape velocity here. My name is Paul Barron. Welcome back into Tech Path. We're going to dive into all that good stuff today. Really what's happening not only in tech earnings, but also take a look at how this may affect some of the cream of the crops when it comes to digital assets. And we'll, of course, break down Bitcoin for you guys. Take a look at some sentiment, all that good stuff. If you're not a subscriber of our channel, get in there, subscribe right now, take a minute, go ahead and click that little bell. That's going to give you notifications when we do our live streams, which are usually around 3 o'clock. We're dropping a few more videos for you guys, so make sure, we're trying to break those down, get them a little bit more digestible to you, so make sure and stay tuned for all that. I do want to thank our sponsor today, and that is Bybit. If you're looking at really taking a look at a new crypto exchange, maybe you're looking at ways to either one, discover new tokens, or possibly even look at new ways to get zero trading fees. You can actually do that over here on Bybit. Zero fees on all spot pairs. Very easy to jump in over there. If you are looking at dropping into a new exchange, Bybit is definitely one of those to explore. You can go through the hot coin side, really kind of following along what's happening over within the exchange itself. But the cool thing is, of course, their spot zero fees program, and of course Bybit Earn if you're looking at trying to do some yields as well. Make sure and use our link below. It's very simple. Just use that. It does help the channel out. Let's get into a couple of topics today. One, of course, has been all around the aspect of earnings as they're coming in. Now, we saw earnings last week and earlier in the week. We've seen both highs and lows. Some markets have been extremely profitable. If you look at some aspects of the food sectors, the banking sectors, some of those tangibles that are very critical in times like this. Tech's big day, though, was a little bit tarnished in this headline right here. Microsoft, Google, and of course, TI disappoint. And if you look at some of the things that happened over here, the quarterly updates for Microsoft, Alphabet, Texas Instruments, they underscored kind of the growing pressure around everything from corporate IT budgets shrinking, digital ad spending, and then chips for industrial machinery, all affecting what would be and most likely see some downtrend. Now, this is something I've talked about for quite some time, is that there is a lagging effect in especially some of these kinds of technologies and big tech companies, because there is a trailing approach toward not only consumer spending, but also how it relates to business spending, which is going to affect a lot of these different companies, including companies like Microsoft. So this was kind of an interesting statement right here. I wanted to highlight this. The global economy is at a tipping point. I would agree with this. This is Jessica Amir. This is a strategist over at Saxo Capital Markets. The dollar will continue to hurt businesses' forward earnings at a time in which consumer demand is likely to fall. The two perfect storms that I've been talking about over and over again. Demand is going to fall. When demand starts to slow, whether that is through people being a bit more fearful in the market, or maybe it's just pure and simple necessity. They have less money. That's a concern that I think is the one that really starts to pressure in on big tech. And it's going to be one that probably lasts around maybe 2 or even 3 quarters. This is a problem that could really spread into 2023. And I think it's one that we have to take a very, very close look at. Here's another example of this sell-off extended to other consumer tech giants. This includes Amazon dropping 4.9% late trading. Those that derive sales from online advertising, including Alphabet, lower. Meta was lower. Pinterest dropping more than 4%. Among software companies, and this is one that's been around for a while, Snowflake tumbled 7%. Salesforce, all of these. I mean, this is basically a full line of all the top stocks within the market that you guys have been investing and others have been investing in for quite some time. There's a lot of mutual funds that have this, ETFs, all sorts of things that really are being affected by this right now. And I think this is a big factor as we look at even some of the tech components that are really going to start causing a little bit of global pressure. Here's an example. South Korean chip maker reported a 60% decline in profit and said it would cut capital expenditures by more than half. It warned that the unprecedented deterioration in market conditions, remember, demand on these devices that start to slows down the global access around a lot of these different manufacturing. So they're going to be slashing production plans, as well as seeing some of those things start to fall in terms of pricing. Now, this is a good thing and a bad thing. Bad because it has short-term pain. Good because it starts to market correct. And as we market correct, I think this is where the opportunity starts to play into it. So I want to talk here quickly. As growth in big tech companies is expected to slow, should crypto care? And there's a few things that have been happening. You guys have been watching our channel last couple of days. A few days we've been talking about this move on Bitcoin and on Ethereum. Many people saying, well, what's really causing this? What's giving this little push to the markets? I think there's a little bit of manipulation, sure. But at the same time, I think people are looking for that. If you could find a safe haven right now, what is it? Where are those little swing trade opportunities? And I think a lot of traders are looking at going in this direction. So you got Alphabet, Amazon, Meta, Microsoft, obviously expected to slow in Q3, but also I think the impact on crypto overall is not a bad version. If you look at, a little bit about this chart right here, which is kind of interesting. And I think there's a couple of things. This is big tech compared to Bitcoin. I think the interesting thing here, there are some correlations, but at the same time, it does have kind of some breakaway velocity. That is one of the things that I continue to preach about here, is that at some point we are going to be in a position where digital assets start to truly make a break and snap away from what's happening out there. So here's a good example. Will crypto snap with Snap? This is if Snap were to be repeated across the technology sector, the results could be disastrous, both tech and crypto. There are a little bit of reasons here to believe that Snap's issues are specific to the company itself and not to marry the wider technology sector. And again, this goes back to companies like that. Will it really have kind of a garnering effect or a tag-along effect where crypto could be facing some of those challenges? Now, they have been linked, there's no doubt. If you think about innovation and tech, it has been linked, and for rightly so, especially last year when we saw so much adoption and movement within the crypto space. But slower growth than predicted for tech companies. Tech and crypto have become increasingly linked since 2021, but this could partly be consequence to a wider economic condition. I think that's more likely the case, is that the economic conditions and pressure that big tech is taking isn't necessarily the same kind of scenario that is playing out in and could be playing out in crypto. Crypto actually, I think, could play as a potential safe haven as we continue to see a lot of pressure. Now, granted, it's going to go down, but when we get to our bottom, our true native bottom, whatever that might be, this is where I think we take a very interesting look at assets. And I think you're going to see a lot more people moving into that direction. We're going to be doing a live stream today at 3 o'clock if you caught this video after that. But it's on wealth building and what is happening around the wealth building scenarios that are playing into the market. And I think this is one of the keystones of what is going to cause some of these wealth building opportunities that could branch off into digital assets. So now here's Meta. It is the one that investors may be most concerned about since rebranding from Facebook. The company has been invested in metaverse and Web3 tech. I think this is a short period of time for Meta, but it is going to be an extremely painful one for them, meaning we could see Meta stock dive even much deeper. And there are a couple of things that point to this. Again, consumer spending down. The consumer confidence declining, the amount of pressures within businesses to not spend money in advertising. Those kind of scenarios are already showing up across the gambit. So Meta relies highly on advertising revenues. So they obviously are the first cost cutting. Remember, people can just shut this off like that quick. So a lot happening out there. I want to go to a clip here, and maybe I will go to a clip. Before I go to that one, I want to talk about this, and that is this section right here. And this is crypto windows hurting Google's ad empire. This is back to another point that I'm getting at, just kind of like with Meta. Google also down in their report. Alphabet down in their reports. The scenario that plays into this is, and it's interesting because we were surprised to find that Google actually had a lot more connection to the crypto markets than I think maybe a lot of people thought. So remember, Google partnered during the quarter with crypto company Coinbase, whose stock price is down 70%. Coinbase pretty much stopped advertising and marketing altogether. I can imagine their marketing budget just absolutely went to just almost a shrivel. And we've seen this around even with channel partners. Now, the interesting thing is on the advertising side, what I think appears to be happening is that advertisers are looking for more integrated content. They're not necessarily looking for, the digital representation, banners, click-throughs on, Google search, etc. They're really trying to set themselves, meaning the advertisers, set themselves up for this bear market to start to create brand awareness and really kind of go in that direction. And this is a hard problem, even within Meta, to be able to do this at scale. So it's a very interesting time as we look into all of these type of things. Look at Google's overall ad growth right here. Let me showcase this right here. So overall ad growth of 6% in the quarter was the weakest for any period since 2013. That's almost 10 years ago. Think about where advertising was 10 years ago, especially search advertising. Other than one quarter in the beginning of the pandemic, that one I think you have to throw out. YouTube and ad revenue shrank from a year earlier. We've already seen that. And then you've got Sundar Pichai here saying that we have a very challenging macro climate. Interesting. Is that really what you're going to say here? We have a challenging How could these people not see these things coming? In essence, what you have to do in a company like this, the roadmap, you understand the economic conditions of what's happening in the market. Why have you not taken real steps in either reducing headcount, doing a Twitter, which I think with Elon, he's going to be cutting a ridiculous amount of people. That's going to be one of the biggest places. And again, this goes back into the thing I talk about all the time. Trending and lagging numbers, which we get now into labor. Now, still, jobs are very strong, but how long can that truly hold? That'll be the big question. Here's a clip on CNBC that kind of gives a good example of it. And remember, when I play these M5M clips, these mainstream 5 media companies that we follow, it's more importantly to get a good understanding of what they think is going on, because there's a lot of times the reality is quite different. So listen into this clip.
This morning about the deceleration in Azure and the deceleration in YouTube. Who had the cleaner quarter?
I think ultimately both had kind of messy quarters. Google had the pullback in advertising, and you continue to see Microsoft decel on Azure. So I'd say overall, I think Microsoft still is cleaner in the sense that there's recurring revenue, there's visibility. Google's still living with the uncertainty of advertisers. You can turn advertising off in a nanosecond if you're a corporation. So that's really, we're seeing probably the biggest turnoff across the board with Snap. Now, Google we'll see with Meta tonight, but we're seeing a tremendous amount of turmoil in the ad market. So I'd say, Microsoft was cleaner, albeit you had that Azure miss and you have the decel that they're guiding for, and you're starting to see now the weakness in the Microsoft business go from the small and mid-size up into the enterprise. And that, again, is what investors were most concerned about. But
Bingo, right there. I want to pause on that. Just go back to the screen real quick, guys. Q3 results, revenue breakdown right there. Productivity and business processes results 16 point. The estimates were 16.13, so they are up slightly there. But Intelligent Cloud 20.3 was the results. 20.36 was their estimates that they missed. More personal computing. Again, it's interesting to me when you look at the reported growth versus the estimates, which are down. These are small numbers when you think about it in percentage, but massive numbers in terms of revenue numbers. And this is a concern because it's the first real, crack in the armor that we've been alluding to for some time. And I think that some of this could have been somewhat sidestep, maybe at least into fourth quarter. I think it's still fourth quarter is going to be the the real killer. So in January, what we're talking about in January, get ready. We're going to see some pretty interesting times. The other thing about this is, remember, all of this happening while Bitcoin is pumping. All right, big tech down, Bitcoin up. And you think about this coming from Winklevoss. Everybody knows who Winklevoss is. Cameron Winklevoss is Gemini, one of the Facebook co-founders. Anyway, you guys know who this is. But the point is that big tech down, crypto up. Why is that? Are we starting to see a little bit of a shift in how mental thought is being created around digital assets? Are people maybe saying, you know, it's just as safe as my big tech stock, you know, what I'm doing over here in, you name the stock today? Or is there an opportunity where they see, oh, this might be a turnaround fast, or at least give me a chance to do some swing trades? I think there's going to be some interesting stuff play out for sure. Let's get into another thing. I want to talk about this chip makers. This is, again, goes back to the slump we've talked about before. And this is against Texas Instruments. So they're still talking about add to warnings about demand. This is the thing that we continue to push on, is the demand side is going to, remember, supply chain side has been the problem up to now, causing rising prices. Demand side is going, when we start to see demand side truly fall out, that's when we start to see basically a cliff effect in the economy. Demand side will have so much impact. One, it will, in some cases, correct inflation to a certain extent. But more importantly, what it will do is will send shambles through the market around everything else. And that's related mostly to jobs and the businesses that support those demand side decisions. The fact that Microsoft was already talking that this was going up into the enterprise space, very surprising for sure. So whose chips are going into everything right here? TI, appliances, missiles. Revenue is going to top out at 4.8 bill. At best, short around 4.93 bill the analysts had projected. And memory prices fell 20%. This is something that's important. I'll zoom in on that right there. Over the last quarter, one of unprecedented deterioration in market conditions. Again, this is another factor that really is starting to set in right now. Also, investors have been trying to pinpoint when flagging demand for chips would begin to ease. They've been missing that. And then this, you know, we already talked about South Korean chip maker and their expenditure cut, which is, again, gets into those supply chain link-ups that really kind of cause those, you know, domino effects in other industries, especially in some of these industries around tech. So a lot happening here for sure. Meta prepares to report earnings amid ad revenue, cost-cutting pressures. A lot of people asking for them to really start to push on reducing their head count. And I think that they may do it. I feel like they've been able to at least get the, you know, the big element they had to land was the Meta Quest 2. They've done that. People are getting that. They're shipping. So I think that in itself, sure, there's a lot more work to be done, but they really have to reassess and maybe reposition how this company is building, not only for now, but for its next 3 to 5 years. So I think a lot of that is going to potentially, I wouldn't be surprised if we do not see layoffs coming from Meta. If that occurs in the next 2 quarters, get ready, because I think Meta stock is going to see some pain points. Speaking of Meta stock, I want to play this for you right here. Just a quick clip on what the analysts say might be happening with Meta.
We've seen reports so far with Meta. Are there things that could help it and things that could hurt it even more, advertising, et cetera?
The broad-based slowdown that Google saw that Google is reporting. I think that is applicable uniformly to a company like Meta, as in search to some extent, along with Facebook's feed, have a lot of overlapping characteristics as far as demand, as far as customers, as far as behavior of advertisers are concerned. Probably Google gains a little bit of market share when we are in a downturn. So that's even an incremental negative for Meta. So I think if Google is seeing slowdown, I don't see a specific reason why Meta should see something exactly the opposite.
All right, so I'll get off that. This is the same old stuff, guys. I mean, it's like, who needs a Wharton degree to figure out this was coming? I just don't understand why companies at this level were not preparing for this very event. I mean, it makes no sense to me. I mean, we've been preaching this for 90 days, and that's enough time to correct a quarter. It's enough time to get your position in place to where this could be identified, and at least now, granted, sure, everybody's kind of been hopium that market flip is going to happen. We're going to see a pivot. This is continuous signs of what we're going to see over the next few quarters. So just be ready as a lot of this stuff bears down. Apple's new App Store tax also on ads is a direct shot at Meta. This will be a big one, I think, and that's more competitive. Sure, it is definitely going to be competitive. You look at some of the stuff we highlighted, just when I thought the relationship at Apple and Meta couldn't get worse, boom, there you go. They quietly updated the app stores now to require that iOS developers use in-app purchases and thereby giving Apple 30%. 30%, ooh, on top of that. So a big deal. So they continue to evolve their policies to grow their own business while undercutting others in the digital economy. At some point, this is going to hit Apple and bite them in the butt. I think they are pressuring the market as far as they can, seeing how far they can push it before they start to see either mass defection or mass movement in terms of other innovation out there in that direction. So I think this is going to be something. So paying to boost posts in a common feature across not just Meta's app, but other social apps like Twitter and TikTok. All that now is going to be a fee that these companies are going to be facing. So if you're doing it within those apps, this is going to be costing them big time, especially within the Apple app ecosystem. Could we see some defection within those markets? And also, it's very possible that some of that could be relayed on in ad fees, which is only going to further depress the ad markets if advertising dollars are going up, because Apple is the antithesis of it here. Is it an evil plan for Apple to destroy the ad business? Maybe. Lots happening out there, guys. Let's take a quick look at Bitcoin. Why is it pumping? What's causing all of this? Again, all these big tech stocks trending down, all of this happening right now, and here you have the chart. And if you just look at the move that we've had over the last, really, since Friday of last week, so less than a week, right there, almost 10% just on Bitcoin in the current moves of where the market is trending. And of course, if you look at Ethereum, same kind of scenario, big, sharp moves up. Now, many people are looking at this. Right now, it's crossing a moving average too. So this continues to look very interesting to me. One thing too about sentiment, when we've looked at that, let me just log in there for a second and we'll get into sentiment. And the thing about that is that as you look at sentiment, the key thing here that I think many markets or many people don't necessarily take into consideration is the opportunity, especially if we see a detachment. Now, sure, there could be short-time detachments, but I'm always looking for those signals that start to create those little bit of moves. And I think that's been one of the things that has been occurring right here on Bitcoin. If you just look at the quick numbers, all the way back to 1017, we saw a little bit of that downtrend. And then right there, 1021, that's when it flipped. Then you had right there on 1023, 1024, 1025, and then right there, or 1024 and 1025 right there, as it starts to slide up. So it's been happening here for about the last 3 to 4 days on overall sentiment there for Bitcoin. Same kind of scenario with Ethereum. If you look at just Ethereum, started to see that lip a little bit, not quite as sharp in as Bitcoin, because again, it's a little different sentiment weight when we see Ethereum. But the fact that it was moving after some very steep downtrends was a good sign for Ethereum. All right, you guys are listening in. Make sure, by the way, you can get all that over on the CPI, which is our crypto power index. All you have to do is start over on paulbaronnetwork.com. You'll find us. There's a lot happening over there. If you go to our website, one thing you will know is that we've done a few changes here. One you'll see is we've got a whole new section here on some of our latest content right here, and then also the news section right here. This now has all of our current data and updates on a lot of our content, as well as our editorial. So it's not all just video. Some of it is editorial that goes in there. You can always jump to our shows over here, get into TechPath Crypto, check each one of them separately if you miss them here and you just want to come to the website, kind of flow through all those different options because they go into a breakout here for both Metaverse Insider and TechPath Crypto. Lots happening over there. Make sure and check it out. If you want to join in on the Diamond Circle, click the link below. It'll help you, and it's absolutely free. You guys want to reach me, it's out there on Twitter, @Paul Barron. We'll catch you next time right here on TechPath.